data, trends, insights, and of course, a regional perspective. Good afternoon to you, Chris. And of course, another person joining me today is Richard Hoskin, who's our General Manager of Bayleys Property Management. He has offices, of course, in here, in Queenstown, Narrowtown, over the hill in Wanaka, and in Cromwell. We have nearly 1,000 managements under our grasp, and he oversees a very extensive property management team. And of course, Richard today will be talking a little bit about the rental property market. Has been essentially our experience today. So we look forward to those invaluable insights from Richard. Of course, let's cut right to the chase, and we'll kick things off with you, Chris. Good afternoon.
Yeah, kia ora everyone. Can I just check that we've got some audio working today?
Absolutely, loud and clear, Chris.
Oh, sweet, perfect. Comments about the national housing market and what's going on across the board, across the regions, before the local team focuses more into Queenstown and the surrounding area. So like, I'll just throw up a couple of very quick slides just to talk through what's going on. So hopefully you can see that. Boom, looking good. So look, just very high level, it's fair to say that the past 12 months, almost 18 months now across the New Zealand housing markets generally has been weaker. And we've seen a downward trend in prices over that period. We are, however, now starting to get some interesting signs of stability, particularly up in the Auckland region and in a couple of other centres, which is providing some promising signs that we're starting to bottom out on that downward trend, and that we'll probably start to see some recovery come through in the over the back end of this year. And the local team will talk a little more about Queenstown, because the local market's actually been really interesting and surprisingly resilient, which is quite exciting. So anyway, just to talk through a couple of the trends that we're seeing. First off, sales volumes. Now, this graph's actually really important if you're looking to buy or to sell, because it gets you that sense of how much activity is actually happening around New Zealand. And so this graph here, what you can see is the monthly number of sales across New Zealand. So for March, we had around 5,800 sales across New Zealand, which is a lot of property selling. But to be fair, if you compare with prior Marches, so the blue lines, you'll see that definitely 2021, like it's well off that, but that was a pretty crazy year. But even through 2017 to 2019, like pre-pandemic, the numbers were typically a step higher than what we've seen in that last March. A couple of interesting things that have come through in that period, though, is we obviously had the cyclone and the floods, which have taken out a little bit of momentum in that first part of the year. But nonetheless, the market was a bit quieter coming in. From a sales price perspective, so just tracking the New Zealand median house price, you'll see that it's been relatively stable over the past couple of months, and over March it actually increased marginally from 765,000 to 775,000. It has bounced around a little bit over the last 12 months, but you can see over basically the last 3 or 4 months it's been reasonably stable, which is quite cool. Now, interesting question with that 70-75 is, like, what does a house look like at that price level? And so just across New Zealand, so at that price point, here's a couple of properties that the Bayleys network has sold recently. So first off, up in Auckland, this is a brand new terraced house, 2 bedrooms within Hobsonville Point, which, if you're familiar with Auckland, is one of the big master plan communities on the outskirts of the region. Some similarities to, I guess, what we'd see with Jack's Point, but not as much landscaping, and housing not quite as cool. But yeah, so 2-bedroom house at about 775,000. Once you get outside of Auckland into most parts of New Zealand, at around that 775 for a brand new home, you're probably looking at 1 extra bedroom. So instead of 2, you're getting 3. And that was the case with this property here. So this is a brand new home in Onikawa in Napier. And so this one's 3 bedrooms, 2 bathrooms, sitting on about 500 square meters. and that sold at that same price as the house up in Auckland. So you can see generally at around that price level in Auckland, probably 2 bedrooms, and in other regions, probably 3 bedrooms. Except Queenstown is a little bit different because the house prices in Queenstown are definitely at that premium end and actually a lot more like Auckland than compared to other regions. That's quite exciting. And then just also in the South Island, so over in Christchurch, another 3-bedroom home selling around that price as well. So, nice houses. And yeah, there's definitely good bargains to be, or good purchases to be made at that price level. Now, just looking regionally, one of the things that's been quite interesting over the last 18 months has been the price performance and the market performance as you get into different parts of New Zealand. And so whilst New Zealand generally has had this downward trend, there's been certain regions that have been a bit more resilient. So, for example, the Auckland and Wellington regions have had the largest correction. The North Island's had a moderate correction. The South Island's actually been a lot more resilient on prices. So the declines that we've seen in the South Island generally have been not nearly as bad as what we've seen in the North Island. And once you get into Queenstown, it's a different story again. A couple of things just to point out, and this graph's a little bit tricky, but basically we've got every region along the bottom, and then the bars are the last 6 months of the house price index. And what you'll see is, if you look closely, so the first is that into Otago, you've had a very slight softening in prices over the past 6 months. Not too bad though. And if you look at Auckland in particular, what you see is the last 3 months have been reasonably stable, which is quite cool because if you went back to the start of the correction, we were dropping quite substantial amounts every month. But over those last 3 months, prices have actually been really reasonably stable, and that's been similar for New Zealand there on the right-hand side as well. So it's giving us some sense that we've gone out of that downward trend and now starting to stabilize out, which is exciting. Now, if you look at the outlook for the market, the past 12 months, the 3 things that have really stood out across New Zealand have been the impact of the higher interest rates, particularly on buyer sentiment and buyer price expectations. The second big factor has been the fact that prices have been moving downwards. And so that's taken urgency out of a lot of people in the market. And then the third big factor has just been this negative sentiment attached to both of those. And you've definitely seen it through the media. A lot of the economists trying to pick who could work out the biggest doomsday scenario. Just a quick update on a couple of those factors, though. So the first on interest rates. Now, something that's quite interesting in the past couple of weeks was the latest inflation data. And so if you've been following the news, the inflation's been up at about 7%, like early 7s, over the back end of last year. And coming into this latest result, which was the March result, the economists were generally expecting it was also going to be in the 7s. But the latest result actually came in at 6.7. And that doesn't sound that amazing, but it's changed the sentiment amongst a lot of economists. So previously, they were probably thinking that inflation was going to rage out of control, whereas this latest result gave some sense that it's actually starting to peak. Now, where that becomes interesting for the housing market is when you look at interest rates, because as inflation goes up, the interest rates need to go up as well. But as inflation starts to come back down, you don't need that same rise in interest rates. And so that gives a good sense that inflation is probably starting to peak and that interest rates are also peaking. And we're seeing that come through in the interest rate data as well. And so if you look at this, the red and the blue lines are your 1-year and your 5-year residential mortgage rates over the past couple of years. And what you see is if you zoom in on the latest 2023 data, you'll see the blue line, which is your 5-year fixed mortgage rate, has actually been reasonably tightly, like trading within a reasonably tight band over the past, what's almost 6 months now. And so if inflation was going to rage out of control, we'd see that just moving up and up and up. It's actually started to peak off as well. So that's a good sign that interest rates, we have a better idea around where they're heading. And so as a result, people are starting to get a bit more confidence around transacting. Prices stabilising. So we talked about that briefly. The big one to watch there is the Auckland region, given that it was the first market to show a really big correction. And then finally, just on that sentiment, so I spend quite a bit of time talking with people all across New Zealand in our network around what's happening and how they're sensing the market. One of the things that we've picked up over the last couple of months is that there has been a lot more buyer inquiry coming through, and that's converting into transactions now, which is exciting. The other area where we're seeing this is we deal quite a bit with the media, just commentary into what they're up to. And there's been a noticeable change in the headlines that have been coming out. So if you went back to, I've got 2 examples here, so December or late last year, the big focus for a lot of the headlines was the downward trend in prices, whereas now there's been a much more defined shift in the media towards more focus on prices bottoming out and to the recovery phase of the cycle. So we think that that's going to be good for the housing market because the local markets are pretty well driven by sentiment. And so as we get more positivity, we'll get basically more happening in the market as well. So that's the national market. Really where things get interesting though is when you jump into the local area. And so I'm really curious to hear what the local team's picking up in that space, given that the Queenstown market has been a bit different to most places in New Zealand. So that said, I'll hand it back to you, Stacey.
That's Chris. That's great. So, Chris, quick question for you. Across New Zealand, are we seeing many people, I guess, buy in a different region?
Yeah, so it's interesting. We capture stats on where our, like all the properties that Bayleys sells are located and where all the buyers have come from. And so different parts of New Zealand have different trends, right? So for the Auckland region, most of the buyers are local. And we think that's because the prices are usually pretty high. And I don't know, like all the South Islanders are like, we wouldn't want to move to Auckland. So that's totally cool. On the flip side, though, when you get into the South Island, we've seen quite high levels of activity in Otago, Canterbury, Marlborough, and Tasman, with out-of-market buyers purchasing into those locations. And they're coming from everywhere, but the 2 big sources have been Auckland and Wellington for that sort of out-of-market purchases. And I think if you looked at Queenstown specifically, there's also been quite a bit of activity from those in Canterbury as well. So yeah, quite an interesting space. The other area which is curious is the overseas buyers. And so if you looked at Otago and specifically Queenstown, that seems to be the area that's getting the most overseas activity at the moment, although it's still a relatively minor component of the overall transaction activity. But we think that that's probably returning Kiwis going for that lifestyle. So yeah, pretty exciting.
That's great, Chris. Chris, another topical question. Do you think now is a good time to transact?
Yeah, so it's interesting, right? What I would say is that everyone's trying to pick the bottom of the market, and you only know it in hindsight. And what I think will probably happen is as the market starts to recover, it will actually lift quite quickly. What that means is that, in my mind, prices look to be stabilizing. So you've probably got about 6 months at the moment where there's quite a good window. And I think after that, it's pretty hard to tell where things are going, but it's probably into recovery phase at that point. I think the thing that people quite often forget about is that, and I remember dealing with this personally, when you're buying a house and the market's hot, prices are going up, but it also means there's a lot of competition. And if you remember, all the media coverage from 2021, it was all about people losing out on auctions and things like that. And it's actually not as fun to buy in that time, whereas at the moment you've got pretty good selection and an ability to negotiate. So I definitely like that idea of negotiating rather than just competing. So yeah, that's what I'd say on that.
Right, Chris, thank you for that. Great to have those insights from both the national and, of course, a regional perspective. Thank you very much. Of course, now we're going to move to Richard Hoskin. And Richard, we're going to have a bit of an oversight, of course, from our local rental property market. So we'll move now to property management. Good afternoon, Richard.
Thank you, Stacey, and nice to chat, Chris. I'm going to provide some oversight on the rental market through the Southern Lakes region and specifically in Queenstown. So on review of the rental market over the last 12 months, the high-level message is that overall rental market conditions essentially remain unchanged. But those conditions are now heating up, and they're creating a challenging and at times a very stressful environment, especially for tenants. So what we continue to see in the Southern Lakes here is we've got a growing gap between supply and demand. So we've got more people wanting to rent than there are properties available. Our weekly rental rates continue to edge up. At the moment, we're exceeding pre-COVID levels in several areas, particularly the Jacks Point, Queenstown and Wanaka. Multiple applications for all properties. Now, it's not uncommon for us in the property management sector to receive 10, 20, 30, if not 40 applications per property right at the moment. Landlords, they remain very selective about their preferred candidates at the moment. They have their criteria and their expectations around what a good tenant is. Now, they identify and they leave us to place those tenants for them. Investor exit from the rental market appears to have peaked. What we're seeing, the long-term rental stock now is relatively settled at its current level. There's a limited number of new properties being built, particularly for investment. There's also a growing home and income build option happening, where we've got the main house where mum and dad and the children live, and then we've got either a 1 or 2 bedroom self-contained unit out to the side or attached to the house, and that's used for income to offset the general cost of living and our mortgage commitments. So we're seeing a lot of that at the moment. And of course, we've got the resurgence of the short stay properties that are available in Wakatipu. Now, that's been widely discussed and reported on, but currently there's 900 plus short stay properties in the Southern Lakes. Now, that's made up of the Airbnb, the professional short stay companies, and private owners. Now, those short stay options, they provide stronger returns for the landlords than a typical 12-month rental, a long-term rental option. So we can't lose sight of that. And plus the owners, they have the ability to use those properties themselves at any time. So we see that imbalance, and there's no change expected to that in the short term. We've also got a strengthening demand for company lets. Now, this is new, and it's a recent initiative that's been seen here, particularly in Queenstown. We've got those small independent businesses through to large companies. They're investing and beginning to actually purchase properties to house their employees. As I said, this option's new and it is a growth area in the market. However, those company lets, they're now becoming an additional cost to doing business in Queenstown, and it's another business expense for those companies. Queenstown, it remains a destination of choice for people. We see returning Kiwis coming from overseas who want to rent here, and they're now really conscious of that work-life balance that we'd all love to have, and they believe they can do that here in the Southern Lakes. We've got people renting while they continue to build their forever home in the Wakatipu Basin, and those builds can take anywhere from 12, 18 to 24 months. So again, that takes up more of the rental stock. And finally, we've got a really strong increase in high-end short stay rental options. That's sort of 3 to 10, maybe 11 months stay. Now, these are typically high-end properties that rent anywhere from $2,500 to $7,000 plus per week. Now, those owners generally are travelling overseas, and they're using that rent to offset the property holding costs. And people are prepared to pay those weekly rents up at those levels that I just mentioned. So it's not uncommon for that to be happening. Now, those owners of those high-end properties, they're very discerning and they're very selective about their prospective tenants also. We've also got people and more Kiwis moving from overseas, and they want to try out and rent in Queenstown first, actually before they buy a property. And again, they're willing to pay those high weekly rents. So those are what I call the high-level rental market challenges and conditions. that we're seeing across all our offices in Queenstown, Arrowtown, Wanaka and Cromwell. So that's what's happening, and that's what we're seeing now in today's market. So now, Stacey, I'm just going to quickly go to a weekly rental table and highlight some key points from that. If we look at that table, it shows the weekly rents that are being achieved for the various property sizes throughout the whole of Queenstown, from 1 through to 4 bedroom houses. Now, the figures are a weekly average of those various property sizes, and they take into account the outliers, the cheaper properties that are on the market, and those high-end ones that we've been talking about. So the average price generally reflects it's a modern, a well-insulated, a low maintenance and a warm property, essentially a good, decent property to rent. Now, if we looked at those same properties 12 months ago, on average, they'd be approximately $100 cheaper across each property size that we're seeing there, be it 1, 2, 3 or 4 bedroom. Now that change, it reflects the challenges and the potential financial stress being faced by tenants today. Again, this is an environment prospective tenants are experiencing right now, today, as we're seeing here in Queenstown, in Wanaka and Arrowtown. Now, if we look at the property listing numbers along the side of that table there, we use trademanrealestate.com to reference points for the number of rental properties available in Queenstown region at any given time. And then they continue to track down if you look at them. We're right down to about 20 odd listings right now available across the entire Queenstown region. So that's not many. And if we went right back pre-COVID or even at the start of COVID, they were looking at 80, 90, 100 listings at any given time. So that's where we sit today. So with all that background information, I'm going to take a very quick look at what we think the future of the rental market is in the Southern Lakes and how we see the sector. Now, the Southern Lakes, and particularly Queenstown and Wanaka, it remains very resilient. There's a number of factors for that, and it includes we've got a very sound local economy. It's underpinned by construction and building developments. Yes, there's challenges in that space, but there's still plenty of activity going on. We also have a returning tourism market. We've got visitors coming or continue to make their way back to Queenstown and the surrounding areas, and the hotel occupancy that's strong with a growing forward bookings. And those are the fundamentals that are underpinning the local economy in the wider southern region. Now, however, and right now, Queenstown in particular has a shrinking rental supply market, with that gap between supply and demand continuing to grow. Now, to retain staff in the hospitality and the service and the retail sector, employers are having to find ways to subsidise their staff accommodation costs. And as previously mentioned, it's now becoming a cost of doing business in Queenstown. It's a new dynamic, and it's not something that's really been experienced by those employers before. We've also got the growing demand for that work-life balance, and we anticipate that many investment property owners will consider relocating to Queenstown and the wider Southern Lakes to permanently live in their investment properties. And that's, again, going to further reduce the rental stock. Now, wrapping up, as a result of all of those factors and a lack of the investment properties being built, Queenstown Lakes will not have the quantity or the quality of rental stock available into the foreseeable future. Now, therefore, as an overarching view, what that means from our perspective, unless there's a solution found by the government or the QLDC, and they pull a rabbit out of the hat, rental levels in the Southern Lakes region specifically will continue to edge higher until supply meets that demand. So look, Stacey, that's our wider view of the rental market and what's happening right now.
Thanks, Richard. There's some valuable insights there also in terms of where we sit at the present time. We know we've got some challenges moving forward. Still a great sector to be involved in, Richard. Just out of interest, what's the average weekly rental in Queenstown, say, versus perhaps Auckland?
Yeah, an interesting comparison, and Chris can correct me if I'm wrong, but it's noticeably more expensive in Queenstown to rent as it is in Auckland. If we took a one-bed property in Queenstown, about $500, $400 in Auckland. A three-bedder, $850 here, about $700 plus Auckland, and so it goes up to a four-bed. So in today's market, Queenstown is as expensive as it gets compared to anywhere else in New Zealand.
Sure. Okay, that's great. And I guess also, and this has been a bit topical too, but why are so many Airbnb properties in Queenstown that rented?
Look, I suspect we all understand the reasons for this. Those reasons have been widely discussed and reported. But to answer the question, Stacey, it's a result of government legislation that includes such things as that bright line test being extended out to 10 years for second properties where you don't have to pay tax. Interest deductibility option from loans has been removed on existing properties. And generally, there's a better financial return for short stay options versus the longer term rental options. And I think, most importantly, the biggest problem we've got, the new tenancy laws that were recently introduced over the last 12, 24 months. And the most challenging is a fixed term rental is now no longer a fixed term rental. A landlord has no control over enforcing the agreed fixed date. And if the tenant chooses not to leave, if I was renting a property off you and I decided not to leave, you couldn't do anything about it. It just turns over to a periodic tenancy. So that's really the biggest challenge.
Sure. That's great, Richard. Richard, thank you again for those great oversights. That's Richard Hoskin, of course, our General Manager from Bayleys Property Management. Okay, everybody, I'm going to move now to, I guess, our last segment of this latest market report for 2023. Of course, it's talking from a local Queenstown and Arrowtown area perspective. Let's bring up that first. So the first graph, we're going to talk more around the left-hand side graph there. So we're talking more from a Queenstown, Arrowtown standpoint as opposed to Wanaka. As much as we love Wanaka over the hill, we're going to be talking about Queenstown, Arrowtown with respect to numbers. Our first slide there, if you look at the monthly sales for Queenstown, Arrowtown, comes up now there. So Queenstown, Arrowtown, look, when we look at it overall, sales activity is still very reasonable down here for Queenstown, Arrowtown. It was we saw some 59 total sales for the month of March, and this is looking at year on year with this graph. So 59 total sales for the month of March of 2023 versus the same period for 2022 of 55. And of course, 2021 March back then was a considerable number for obvious reasons at 73. Interesting enough, when we talk about total sales value for March 2023, there was a total of 115 million, which actually is the highest value of sales for some 15 months. So interesting to see that. The average number of days on the market here in Queenstown and Arrowtown sits around some 60 days. We talk about Bayleys market share, and I'm quite proud to do so for Queenstown Arrowtown. Our market share, our team has done exceptionally well in that space with numbers. Our market share in terms of volume has been some 40% for March, and by value 38%. And looking at financial year to date, 49% by volume and 37% by value, respectively. So some very good numbers there from the Bayleys team going forward in this local market. If we go to the next slide now as well, and we look at the median house price, and because we've got Queenstown and Arrowtown there in the red, Queenstown Lakes District in the blue, and then nationally New Zealand on the bottom line there in black. And of course, Chris touched on this before. The median house price for New Zealand is some 775,000. Of course, for Queenstown there, Lakes 1.405. So if we talk a little bit about Arrowtown first, in Arrowtown, the average sale price there for Arrowtown year to date has been some 1,638,440, and the average days to market in Arrowtown have been some 71. I think it's been some total of 25 sales year to date in that Arrowtown market. There's surely, there is actually, unfortunately, a lack of listings in that current market. And talking to our manager, Richard Newman, who does probably have around 85% of that market. So over there. So, but still some good numbers coming out of there and some good sales. I think there was a sale recently, high sale just over 4 million. Of course, Arrowtown has come off a very high base, I guess, the last 3 or 4 years with those sale prices. Looking at the median house price, I guess, Chris, some comments from you too. I guess when you have, sales less than 500 per month, that median that median price can sort of bounce around depending on the houses sold each month.
Yeah, 100%. So what you see as you go through the different levels of stats is the New Zealand median's quite smooth because there's so many sales. Like in every month, there's probably 5,000 plus sales. Whereas when you get into localized areas, there's fewer sales, so the median bounces. Best example of that was you can see on the blue line for Queenstown Lakes, about April 2022, there was this massive drop. And what happened there was a tranche of apartments that sold into the market like a new project. They all came through in the same month and they dropped the median and then it bounced back up. So you're definitely seeing that through the local stats.
Oh, it's great. And of course, but really overall for Queenstown and Arrowtown, reasonably stable in terms of price versus a lot of the other main areas within New Zealand. Look at house price indices as well. This is from October 2022 through to March 2023, covering Queenstown, Arrowtown, the Queenstown Lakes District again, of course, New Zealand overall. Really, this, Chris, and you might have some further comments here as well, but still reasonably stable, although perhaps a slight downward trend in the indices.
Yeah, but very slight downward bias in the local markets. But if you take that data set even longer, the local area has been really resilient on prices, and I think probably surprisingly resilient. And Stacey, Richard, you guys probably have some ideas around what's driving that. Like I always assume it's that the local area around the Lakes District has so much just beautiful, like just a great place to move to. And so I assume that's what's driving that. There's been this big shift, particularly during the pandemic, for people saying, actually, if there's anywhere I'd like to live in New Zealand, it's probably down around the Queenstown area. Do you think that's the case?
I agree, Chris. I think, we've been waiting for this delayed effect in behind Auckland that hasn't quite come yet. And I think we'd say, Richard, the queue is long to get into Queenstown. But I think on the back of COVID, there's been, I think COVID's sharply put things into perspective, that lifestyle choice, balance of lifestyle, what you can do without what you need is incredibly important. So we are seeing, especially in the North Island, a lot of parts of the North Island and especially Auckland, a lot of people moving down here on a permanent basis. Aucklanders who have holiday homes, moving down here permanently, kids going to school to really have that lifestyle choice. So so that's very interesting to see. Thank you, Chris. Let's move to also now to talk a little bit, I guess, about some of the growth in and around Queenstown and some of the pipeline project developments or land developments. Again, the main growth as we get this urban sprawl from Queenstown is really down that main southern corridor down through to Jacks Point, Hamleys Farm. That seems to continue. We've got some big developments down there. Of course, a new development which hasn't come on stream yet, which will be in due course, the Coburn Special Housing Area. There's some 526 residential sections there that will come online. They'll be between 280 and 975 square metres. That will be a great development. Look forward to that coming on the market. Of course, you have the ongoing fill out of Jacks Point and the ongoing development, especially around Lake T with the clubhouse. Of course, that Jacks Point Village, the great flagship development, which has been forever popular and oversubscribed for a long time now, and probably attributes to a lot of the monthly sales. That's, of course, Hamleys Farm, highly successful development. That's probably winding down. It's coming down to probably in around circa 100 sections are left there. The average size section from the last release, which is back in December 2022, was 422 square metres, an average price of just over 391,000. But look, those sections are, when they do come to market, they are oversubscribed, and equally as popular, as of course, the dwellings and house and land packages that we see there as well. It's phenomenal, that little ecosystem out there, Richard, we've seen for many years now. in that area. We talk about the dwellings out there in terms of prices. The 3 bedrooms out there are sort of between 1.15 or 1.3, a 4-bedroom circa 1.4 million, and a 3-bedroom plus a 2-bedroom unit is sort of featuring a sale price of around 1.6 million. So, we talk about entry-level first-time home buyers, it's still a big mark, but a very, very buoyant part or sector of our market that continues to go. I think either built in that area or currently on the block, there's about 1,000 total dwellings. That aside, I said we've got the Philadelphia Jacks Point. Also in time, this could be in around 18 months' time. We've got the Homestead Bay land development, a number of sections there that will come online. That is a big part in the future of Queenstown in terms of its growth and development. Look forward to that. And then we go down the lake, down the toe of the lake, down to mighty Kingston, the home of the Kingston Flyer. And at some point soon, there'll be some 900 sections released in and around there and behind the golf course, some fantastic flat and terraced sections down there. But that certainly is where things are heading for the main growth for Queenstown going forward. I guess we look at the outlook and maybe perhaps a bit about the balance of 2023. I think, we talked about that delayed factor behind Auckland, Chris. That hasn't quite happened here. There are still opportunities in this current market. And although I guess our buyer pool may have halved, our volume may have dropped and days to market have pushed out, we are still seeing transactions occur. And there is still a strong appetite by some buyers to transact in this particular market. This market is not bucking the trend. It certainly has its challenges. It's certainly got a lot tougher. I guess our team has to work a little bit harder too to sell it in. But I guess before coming off those COVID highs, where the average sale price went up some 20%, that wasn't quite sustainable. So there are still deals there, which is great, and there are still opportunities clearly in this market. It's interesting to see too, Chris, so looking at the total passenger numbers. I mean, Queenstown and Arrowtown is incredibly busy. I think China is slowly starting to come back online down here as well. Total passenger numbers or arrivals, both domestically and international into Queenstown for 2023 was some circa 209,000 versus 2022 of 72,000. So those numbers are up. Chris, you and I have spoken about migration numbers too. I mean, migration arrivals nationally of New Zealand are up some 195% to 152,900 for the year ending February 2023 versus year ending February 2022. So interesting stats.
The rental market as well, right? Like I imagine that's going to bring people into the local area. Richard, are you seeing that in the rental market?
We're getting a lot of inquiry from out of town, and we touched on that work-life balance, and almost without exception, that's the main driver of people wanting to come in and have a look in Queenstown and try and find a rental.
Makes sense.
So really, I mean, properties, as I said before, properties are taking longer to sell, but by and large, prices seem to be, in most sectors, seem to be being upheld. We talk about the top end, prices are holding there. We talk top end, we talk sort of that 3 to 4 million plus. Probably perhaps where it might be slightly sticky is that mid-range residential, what's the 2.5 million. And that bottom end, we talk about bottom end, the early ones, 1.3, 1.4, and the price being now meeting the sale price just a little bit over 1.4. But that seems to be still very buoyant as well, and seems to be people who are still cashed up, pre-approved, are looking to transact in this current market. Of course, Chris, Richard, the burning question on many of our viewers, our listeners' lips, of course, is it a good time to buy? Chris, you touched on this, good time to buy, or indeed, conversely, is it a good time to sell? I guess if we talk about buyers in this current market, that fear of missing out is certainly well gone. And that fear of overpaying is certainly there. There's no argument at all, no debate, the heat is certainly out of the market. And a lot of buyers are looking at properties which are very firm in their view and perceived value for that property. They don't seem to be budging from that. But at the same time, there is a strong desire for some vendors in this current, or sellers in this market, who are prepared to meet the market and are very committed to selling, or perhaps need to sell. But so there's certainly some opportunities there. I guess for buyers, there is more selection at the moment than there has been in the past, certainly the last 3 or 4 years. During COVID, we had a total circa about 250 total listings here in Queenstown and Arrowtown. more recently did move up to about 425 total listings. I think we just dropped below again that 400 mark total listings, but certainly there is a bit more selection and choice. I guess there's less competition for buyers that are looking to transact currently. Our buyer source at the moment, we are still seeing, as I said previously, a lot of Aucklanders, a lot of people from North Island looking to shift down here. It may be due to a number of reasons, crime rate, cost of living, again, that balance of lifestyle, but that makes up in around about 26% of our total buyer source here for Queenstown and Arrowtown. Again, that lifestyle choice is a big thing post-COVID. We also talk a little bit about, I guess, our auction success too. It was pleasing to see last Friday at the end of our April campaigns that Bayleys Queenstown and Arrowtown transacted some 10 out of 14 properties at a total value of around 11 million total sales value, a clearance rate or success rate of 71%, which was fantastic. So I think we had a bidding on 11 out of the 14 properties. So auction room was very busy. We had 800 plus people online, multiple bidders on some properties. So, it's interesting to see that and very positive to see that, Chris, going forward. We might be a little bit up and down as we move through the course of this year, but that was a very, very positive sign to see. I guess also when we talk about auctions, we still see that as the most effective way to sell your property, the most effective method in this current market. I think according to our Bayleys national stats, you are 127% more likely to sell by way of auction than any other selling method. And I firmly believe and very confident in saying this, that if we were on Friday selling by any other method, that we may not have had the deals or sales or the results that we did on Friday. Of course, if we look down the line there too, we talk about some momentum, Chris, we talk about positivity. We've got an election coming up in October, and historically, year on year, we look at, in around that time, it gets a little bit quiet. It may get quiet and sort of stop around that time. I think if the opposition does, not to talk about politics too much, but the opposition does get in, I guess some positive stuff there as well. I've talked about bringing the bright line test down from 10 years to 5 years, bring back that tax deductibility in, which will certainly help that purpose investor market. That will give some positivity and some momentum going forward as we lead into that Christmas break. We may well see coming to the end of the year, Chris, also some competitive bank home loan rates. The banks are rigging the engine. They want to fill those home loan books up as soon as they possibly can. We're going to be seeing, or we will be seeing, as of the 1st of June, less restrictive loan value ratios. So that's another positive thing. I think, Chris, also, we talked about this earlier today. There may be some levelling, I guess, in some of those inflationary indicators going forward. We saw the latest stats out for the unemployment, around about 3.4%, remains unchanged. We talked about the 10-year, long-term government bonds, which haven't really changed over the last 6 months, between 4% and 4.2%. So I guess some positive things going forward there. I mean, the markets are the market. And Chris, you said this before, it's hard to pick the market sometimes, but you don't know if you're at the bottom until suddenly that market is going up again. But I can tell you here, and this is my personal point of view, as opposed from a base perspective, I think the best time for a buyer, you have a window of opportunity right now to perhaps the end of the year for perhaps some good buying. I think as we move into that Christmas period, and I think maybe, unless we're sideswiped by something unbenign going forward, but before we hit that next peak selling cycle, perhaps the first quarter of 2024.
You make an interesting point, the timing, Stacey. I have a family member who's looking to buy a house right now, and they're asking me, is it the right time to buy? And of course, give them all the reasons, but just supporting what you're saying. Next 6 months at most, I think, is the right time to be doing that.
Yes, yeah, absolutely. And of course, for vendors, if they're looking to sell, if you're asking the same question, yes, there is slightly more competition out there at present. But again, by and large, across the board, Chris, we're seeing prices relatively holding pretty well, pretty stable across most sectors in Queenstown and Arrowtown. There is a difference in attitude of buyers. We talked about that before. They feel perhaps they're a little bit more control. And they do have a very strong perception in terms of value. But again, they're keen to transact in this market. And I guess there has been some realignment for vendors with respect to values. I guess, again, that champagne, oysters and dream price isn't quite there. And we're probably still more in that mid-range sort of sector. But again, there's still opportunities there and still keep people keen to buy in this Queenstown Arrowtown market. So that's great to see and still very, very positive. So look, that's a roundup for me. I hope that gives you some very good information. Chris, anything further from you for a quick roundup on our local market?
Overarching comment is it's been interesting to see the resilience of the local market. And I think a lot of that comes down to the natural assets that you've got down there, just beautiful scenery and everything. And as someone who's based up in Auckland, and my wife and I had actually looked at moving down to the South Island, and the Queenstown Lakes District would be our #1 destination. So I guess you can kind of see why the interest is there and why it has been resilient. So yeah, exciting.
Great. It's brilliant, guys. Well, thank you very much again, Chris. That sort of wraps up our latest Bayleys market report here, live from Queenstown. But again, a big thank you to Chris Farhi, the Head of Insight and Data and Consulting for Bayleys nationally. Thank you again, Chris, for your valuable input today.
Yeah.
And of course, again, to Richard Hoskin, the GM of Bayleys Property Management. Thank you to all your input today as well, Richard.
Cheers.
For everybody who's registered online, we will certainly be sending out all the associated information, slides, and latest market report, and of course, this recording. We thank you for your time. Thanks for registering online. And if you are indeed looking to buy or sell, please contact Bayleys, and I look forward to seeing you next time. Thanks very much.
Yeah.